Well, we've got pressure on the grains and the cattle market. Not so much, though, however, for the dollar or the hog market. Those markets are trending higher. Let's get analysis now of all of today's activity as we visit with Brian Splitt. He is with Allendale Incorporated. Brian, this grain market still remains under pressure, and many are saying that this is harvest pressure, and the fact that the dollar is, showing signs of continuing strength, that it just continues to not really give the bulls much to hold on to here in the grains anyway.
Yeah, as far as the dollar goes, it's hard to attribute anything to the dollar anymore. I mean, this dollar has been in a downtrend since the beginning of the year, and that's never really provided any support to grains, so I'm not going to really attribute some short-term strength in the dollar to weakness in the grains. But I think the bottom line right now is we do have harvest going on, and more or less the general thought process on what we're hearing for yields is that they have been better than anticipated by the producer. Right now we've got the report, which we had on Friday. While the old crop stocks were a little bit less than expected for corn to the tune of about 50 million bushels, I don't think that's large enough to get the trade excited. And although we were higher on Friday, we did not take out any resistance. Actually, we had traded up near the upper end of the range, and we're seeing some pressure from that. So the inability to take out technical resistance leads to selling. On the soybean side of things, we had some rain in Brazil, and that was part of the narrative as far as why we were seeing some support, waiting for them to actually get in the field and start planting, and when they are delayed, that delays their harvest. So this rain should allow them to start planting, and that takes that narrative out of the equation here short term. And wheat right now also under pressure. We had a nice uptrend going into the report. Wheat has taken out last week's lows, so we are seeing some technical selling there as well.
So do you think that wheat trade was leaning pretty heavily the one direction and then just got caught by surprise?
That was probably a very good example of a buy the rumor and sell the fact type of a setup, and actually the fact that they were looking for was not bullish, so that is most likely exacerbating the selling. Technically, the rally took us right up to the 50-day moving average in the December contract. That was where we made the highs last week going into the report. And having taken out last week's lows, right now that does suggest that the trend has reversed. So I would think that if this wheat market continues under pressure, that will keep some pressure on corn as well. But corn right now seems like it's in about a 15 to 20 cent trading range. We're right now 10 cents off the high of that range and 8 cents off the lows of that range. So it doesn't look like it's in a hurry to go anywhere fast.
Yeah, that's right. Right now, December corn is down 3.5, 351 3/4. March corn down 3 1/4 at 364.5. Soybeans for today, and as Brian just mentioned, still a little pressure here in November. Soybeans down 11, 957 1/4. January beans down 10 1/2 at 968 even. Over to the wheat market, and that's where we were talking about a lot of this pressure is December Chicago wheat down 6 1/2, 441 3/4. July wheat down 4 1/4 at 486 1/2. Kansas City wheat also under 7 1/2 cent pressure on the nearby 435 1/4. New crop July wheat down 8 1/2 at 482 1/4. And we've got double-digit losses for the Minneapolis wheat. It's December Minneapolis down 17 cents at 606 3/4, and July wheat down 13 at 632. December cotton today, and this is a market that was also under some pressure early on, 56 points lower at 67.89. When we return, we'll get into the livestock trade. Check out what's going on with the cattle and the hogs. That's straight ahead here on the Market Day Report. All right, we're visiting with Brian Splitt. He's with Allendale Incorporated in McHenry, Illinois. And Brian, this crude oil market, I want to go here next. This is a pretty interesting market. Are the funds starting to pay closer and closer attention to this market and look for a point to jump in here?
Well, I think this is a market where the funds are always going to pay attention. As far as all the commodities that the funds are involved in, this is one of those markets that can also cause headways in other commodities that rely on its influence. So you've got right now crude oil still holding $50 a barrel on the front month, but when you look at what we've done here, we built a little bit of support, having traded above the 200-day moving average last week and spent the majority of the week above that, and that looked rather significant. Probably got some of the short-term shorts out of the market and blew out of their position once we got through there. But we had an outside day lower, and that was on Thursday, made a new high for the move, and then at the end of the day took out the previous day's lows. And we've been under pressure ever since that, having today, down about $1.50. We're back below that 200-day moving average, and I would say that any short-term length that was in this market is getting knocked out, and we still have some downside objectives to hit. The products are under some good pressure as well, led by heating oil. Heating oil is down over 5 cents. And it looks like just technically that market could set back another 10 cents or so before hitting some substantial support.
All right, let's move on now to the livestock. Here we go. This is all pretty interesting. We start with the live cattle market, which a little bit of a gain here right now. October live cattle up 22, 109.32. The December fats are steady at 115.25. Now just changing, now down 12 at 115.13. Feeder cattle market, in this market, was on fire earlier, then had a little bit of a cooling off period, and now we're back to taking baby steps again. October feeder cattle up 40, 152.63. November feeders up 12, 154.12. How healthy is this cattle market? Because the feedlots already got this next show list priced at 110 to 112.
Yeah, it's interesting. Think back a week ago this time, and we were talking about the market having gapped lower from the bearish cattle on feed report. And, after that, the cash traded slightly higher later in the week, so they brushed that off. We have gone up and filled those gaps that we left early last week. So one of the things that we're hearing is that we do have some producers trying to hold back their animals and market them off of the December contract, which sometimes short-term can be a good thing, long-term probably not a good thing. So I think that we've got some opportunity to do some marketing for cattle producers with, this December contract having traded back up into that gap area, 115.65, and also the February contract also at its gap area of 118.80. So for producers, maybe doing some marketing, looking at the September monthly highs as their risk point, it seems like it would be a smart thing to consider.
Okay. Hog market here posting some really big gains today, and I was having a conversation with one trader earlier. He says he was concerned about maybe getting a little bit of air underneath this market to let us fall back just a little bit.
Yeah, I think it's probably a little bit overdone. The December contract, which is where the volume and the open interest currently resides, we got through some moving averages that we haven't been able to push through in a while, and that happened all in today's session here. So I think we've most likely triggered some stops. Seasonally, we should see some weakness come back into this market, and we'll be watching to see what the cutout levels come out at 11 o'clock here this afternoon. That could very quickly take the wind out of the sails in the hogs here today.
All right, Brian Splitt here with us with Allendale Incorporated. Brian, thank you very much. Right now, October lean hogs up $1.70, 57.10. December hogs up $1.90 at 61.85. February hogs trading at 66.62, and that's just about it's a little higher than the middle of the upper end of that range today. The top end is 67.15, so we're off just a little bit from that, but well above the 64.90. So, Janet, everybody kind of watching very, very closely this hog market to see where it's going and just how far it can go today.
All right. Thank you very much for the rundown, John.
Yes, ma'am.